So one of these things, let me just grab this from my desk, is now worth £56,000 or $72,000 if you want to buy a whole one. Now, I bought mine from eBay for £2.75, so that's a huge profit already. And it's a prop for a video, so that's a business expense as well. Just this year alone, the price of Bitcoin has shot up by more than 62% so far, just about breaking new all-time highs that were set back in 2021. It's now something that you can even buy on the stock market over in the US, and here in the UK, we might be heading in that direction shortly. So that's why I thought it would be good to put together a quick video going over everything, explain what this thing actually is, why it might actually be a good investment or not, then cover off the downsides and finally let you know how to keep it safe if you do end up owning some, because it's not as simple as buying some on eBay and keeping it in your drawer for a rainy day. So what is this thing? Well, there's a lot of misinformation out there, and I think it's fair to say that it's still pretty early days for most people to understand it. Anyway, very briefly, Bitcoin is a digital currency that was created back in 2008 by the infamous Satoshi Nakamoto. Now, whether that's just one person or a nickname, who knows? We've got no idea what that person is, but anyway, they set off and mined the first Bitcoin, which laid the foundations for what was to come. Now, Bitcoin itself is decentralized, meaning that no single person, country, or organization controls the asset, and everyone has access to what's called the ledger. Basically, this is the record of every single transaction ever made. New Bitcoins can only be created by the process of mining, and I'm sure many of you would have seen loads of videos and pictures of big operations in these computers whirring away, making loads of noise. Basically, every time Bitcoin's moved around, sold, or sent somewhere, say I want to send you some, that transaction is verified and approved by the process of mining, and the ledger gets amended forever for everyone to see. To confirm that transaction, the process takes a lot of computing power, and the reward for doing that is Bitcoin itself. So all in all, there's a good incentive to keep the blockchain alive and kicking. Now, the main thing is anyone can take part in this process and mine Bitcoin, and I even made my own couple of mining rigs in my house back in 2017, and they definitely kept the rooms warm and they chewed through electric, let me just say that. But here is the single most important thing though, putting all of that to one side. The supply of Bitcoin is limited to just 21 million coins. Now, once that number is hit, there'll be no more created. That's baked into the code, so it's just not possible to do. And every so often, it gets harder and harder to mine Bitcoin, which is another feature that ensures the supply of Bitcoin isn't suddenly flooding the market. Now, think about how important that is just for a moment. There's almost no asset in the world which operates like this. As for most things, you can just create more of them. Cash, for example, can just be printed as much as governments like. The dollar and the pound will always keep inflating as more supply is pumped around the economy. Oil, lumber, and pretty much any other commodity can be just drilled or cut depending on the demand. Yet Bitcoin will only ever have 21 million coins. And unlike things like cash, stocks, or commodities, there is no single person, country, or organization that can control it. It's completely decentralized, and anyone can download an entire copy of the ledger to see every transaction ever done throughout history. Now, fast forward to today, and you will have seen that cryptocurrency market has gone through some pretty wild booms and busts over the years. One of the first exchanges, Coinbase, managed to go public in the US back in 2021. And just this year, we've now seen the release of exchange-traded funds, or ETFs, that now allow regular investors to get exposure to Bitcoin. In the US, this means that any investor can now open up their favorite investing app and buy Bitcoin through the ETF, and even stick this into a tax-free investing account or even in their pensions. Since being created, they've been extremely popular as well, with billions of dollars worth of inflows from investors, and there's no sign of demand getting weaker as well. It's certainly looking like a really popular route for a lot of people who had never tried this thing before. And just on that point, here in the UK, we are a little behind when things like Bitcoin ETFs, but there are some green shoots potentially. Now, this week, the FCA commented on Monday that they would not be against the creation of exchange-traded notes, which are similar to ETFs but only available to professional investors for the time being. I think if these things do get approved, things like ETFs for the UK public won't be too far away, as if the biggest market in the world has access to them and they think they're fine, it's just a matter of time in my view that they end up here as well for us. It would be quite an incredible journey if you can buy a UK approved ETF, as this would be something we could have inside an ISA or even a pension. Now, just on that note, why would you even want to own something like Bitcoin anyway? Lots of people compare this thing to something like gold and call it a store of value, but If you look at the price history, you'd be very confused as this thing has been all over the place. However, even if you compare it to gold, gold itself isn't exactly some perfect store of value either. It's faced with exactly the same market forces as anything else. Ultimately, the price of gold, or Bitcoin for that matter, is all based on supply and demand. How many people want to buy it versus how many people want to sell it. And it's as simple as that. But the benefit of something like Bitcoin over gold is that you don't have to worry about holding anything physical, storing your gold under your mattress, or worrying that someone might flood the market with new coins. Bitcoin can't be found under a rock, whereas if the price of gold goes up, people have more incentive to go find some and physically rush to dig it out from the ground. Also, Bitcoin, unlike gold, can be sent anywhere in the world in just a few clicks. There's no need to have a complicated exchange fee, fight with a bank to release your money, and it can be all done outside of the traditional finance system. Now, this might not sound all that amazing to us here in the UK with a relatively simple and easy to use banking system, but there's many countries around the world with poor infrastructure and very corrupt governments. If you're from a country with inflation going through the roof, for example, just think of a place like Turkey, Bitcoin could be a very good option to help stabilise the value of your money and avoid that horrible inflation. Remember that inflation erodes the buying power of your money and ultimately is a silent tax that not a lot of people really understand. Also, for a truly diversified investing portfolio, the argument can definitely be made that Bitcoin has a place in an investing portfolio, but I think it's still very early days at the moment as it's really only just getting started. Now, what about the downsides though? Well, before you go throwing all of your money into this thing, we do need to talk about the bad side. As this is outside of the financial system, there's no protections for consumers, and the cryptocurrency world in general is full of scammers ready to take your money. There are quite literally tens of thousands of these altcoins, shortened name for alternative coins, that are trying to capitalize on the success of Bitcoin, but in reality, most of these will end up dying in some pump and dump scheme. Unfortunately, there's been loads of examples like this, whether it's tokens with dog faces on, monkey coins, or even a token named after the popular TV show Squid Games. Unfortunately, anyone can make a new coin tomorrow, and if they get the right hype behind it, they can also cause a lot of damage. Also, anyone can start a crypto exchange and claim to be the trusted place to do business. And again, because there's no regulation, people can do whatever they want, operate in shady parts of the world, and offer absolutely zero protections for customers. You really do have to be careful out there, but I do hope that in the future, things will get a lot safer as this world gets some more regulation. Unfortunately, there will always be people out there who prey on people who want to get rich quickly. And during times like this, when the price of Bitcoin and other digital assets are going up, it's only ever going to get worse. At the end of the day, I'd remember the old saying that if it sounds too good to be true, it usually is, and stay very, very far away from it. Some of the classic tricks out there are these weird coins that claim to generate some kind of magic 1000% interest, but they only work if lots of people keep buying in. Now, I'd call that a Ponzi scheme or a pyramid scheme, so stay away from these completely. It's just these old tricks dressed up with a new cryptocurrency jacket on. Do not get these confused with Bitcoin. It's a shame really that the fraudulent and dodgy stuff gives Bitcoin a bad name. Now, another downside that could be argued is it's really, really bad because criminals use it, and it's rife with dodgy dealers because of the fact that it's anonymous as well. Anyone can send anyone Bitcoin, and there's no names attached, it's just a record on the blockchain ledger and some random sets of letters and numbers as well. And while yes, that's true, I don't see how that's any different from using cash to do your dirty deeds. There will always be criminals or people looking to make the most of the latest tech. But even today's banks, with all of their latest tech, are still giant centres for the laundering of money from all over the world. So I just don't really buy into that argument at all. If anything, I think the fact that the ledger's public and unchangeable is worse for criminals because you can literally track every last transaction if you really, really wanted to. You would need to prove who had control of which wallet, but it would be out there in the open, whereas in the banking system, it's completely closed to the banks involved or the relevant authorities. If we shut down every method of moving money because it was used by criminals, I think we'd probably end up going back to trading shells and sticks of wood, but hey. Right, with all that out of the way, let's get this question answered now about how you can buy these things safely. Now, full disclosure here, I do own some Bitcoin and I have done for a number of years. I don't talk about it much on this channel and it's not something that I promote or hype up because I think a big part of the industry is out there to scam people. It's very much the Wild West, but I do think for Bitcoin at least, this is here to stay and it does have a lot of positive qualities that we as investors might want to take advantage of. For example, even if you consider Bitcoin just to be a store of value and a good replacement for gold, Bitcoin has plenty of space to be able to take gold's market share and replace it over a long period. I also think people of my generation, millennials and younger, prefer the use of cryptocurrency to the likes of gold, for example, and I think this could potentially be something that moves trending forward. I also think that as a global asset that cannot be controlled by a single entity, there is room for Bitcoin in a portfolio, but it's not going to ever replace or stop me from consistently investing into index funds, for example, inside my stocks and shares ISA. This is very much a side thing for me, and although it's done very well and makes up a larger chunk of my portfolio that I care to admit because it's gone up, if it all goes tomorrow, then that's on me. Anyway, in terms of buying it, I've only ever used reputable exchanges and previously used places like Coinbase, Nexo and Crypto.com, but more importantly, to store Bitcoin, I now have everything offline with the keys held on a hardware wallet. Now, without going into too much detail, if you have your Bitcoin held on an exchange, then you don't have full control of it. It's not like stocks and shares, and there's an old saying that if it's not your keys, it's not your crypto. So to avoid all of these issues, I keep my crypto on a Ledger hardware wallet, which is one of these little fancy things here. Now, in order to access any of my crypto, I'll need to use this wallet alongside my passcode to do anything with it, whether that's sell any or transfer it, so that way nobody can hack into my account and transfer my Bitcoin wherever they want. Now, there's always risk with this too. You do need to look after this bit of hardware, but more importantly, you need to look after your set of recovery keys too, which I'm not exactly going to show you on camera, but there's 24 different words that I need to remember and have backed up as well. Because if you do lose access to this and you lose access to those keys, then yeah, sorry, it's gone forever. Again, it can get complicated, so I won't go into too much detail, but if you do fancy picking one of these hardware wallets up, I'll leave a link below. It is an affiliate link, so I will get a small commission if you do buy one at no additional cost to you. I think they're also available on Amazon as well. I'm pretty sure they are. And this is really the only way that I would really want to be owning Bitcoin, making sure that it's on some kind of hardware wallet. Otherwise, there's always risk that the exchange suddenly goes bust or something like that. There are also other hardware wallets available, but I can't say I'm some kind of expert on them. I just know that Ledger's got a good reputation and is something that I use. So that's all I can say really. Now, alternatively, another way to get hold of Bitcoin or cryptocurrency generally would be to get exposure indirectly. So there are now lots of companies like Coinbase, for example, who act as a bit of a proxy to the crypto market. Another good suggestion would be to look at companies who invest in cryptocurrency, or even some of the big crypto miners who are now publicly listed. Now, one of the biggest companies is MicroStrategy, led by the all-time crypto bull, Michael Saylor, whose company now owns more than 200,000 Bitcoin. So rather than owning Bitcoin directly, you could buy a stock like this, and you could even put that inside your ISA or a pension to protect yourself from capital gains or dividend taxes. Now, going back to MicroStrategy very quickly, it's not quite yet big enough to fall into the S&P 500, but this could happen in the future, and you might end up owning it anyway in a global index fund if things can grow. Similarly, the Bitcoin mining stocks are all very small right now, with the largest only around $5 billion worth of market cap. They will be incredibly volatile. I don't own any of them personally, but it could be an idea if you really want to go down that route as well. As usual, I'm not a financial advisor or some grifting hypester teenager who pumps penny stocks, so just be really careful out there and do what works for you. Anyway, a very interesting time in the market at the moment. I hope that's been useful for you. I'd be very interested in how much Bitcoin makes up of your portfolios in the comments below. I suspect quite a few of you probably have a lot more than you care to admit as well. I might go back on eBay and see if I can get any more of these, because I can't believe how cheap that I got my Bitcoin. Anyway, until next time, happy investing.